Nice. Well, thank you guys for joining. Like I said, this is our first episode of Stable Stories. The goal of this space is really to sort of like bring on guests and partners and friends in general that are building and working at sort of the bleeding edge of the stablecoin space. Um, get to know them, like get to know everybody a little bit like better as individuals, learn about the projects they're working on, and like explore some of the topics and like challenges that are happening in the space from from people who have boots on the ground. So um, for those listening, um, Max and Henry are from Privy. They're building decentralized wallet infrastructure for the Web3 space, trying to make things as user friendly as possible in a world where tools and products that we're building are notoriously not user friendly. You guys can give a much better description of that than I can, but that's my 30,000 foot TLDR of your project.
That was a very good TLDR. Yeah.
Awesome. Thanks. So I figure we'll try and keep this to a relatively tight 30. Probably just like go over some like general stablecoin, state of the union stuff. And then dive a little bit deeper into the specifics of Privy, which you guys have been working on, and anything else we want to cover. Does that sound good?
Sounds amazing.
Nice. Perfect. So let's jump right into stable coins, and your personal experiences with them. First time you use them, either in the real world or in crypto. Any standout experiences from either of you?
Yeah, I can start. So I have been around crypto for many, many years, but really started diving into it in 2020 when I was working on the product team at Brex and building on top of a lot of Brex's financial infrastructure, trying to build great user experiences on top of legacy payment rails as crypto was becoming more and more visible. And it all really started to click for me. The crypto is designed to address like a lot of the shortcomings of the financial system that we were building on. And so I started just playing with like every crypto product, and you quickly realize like once you start holding crypto assets that like the volatility is real, and you might end up with an asset that you don't want, and you don't really, especially when you're early in crypto, like know which direction any price is going. And so being able to convert back to stable coins, and just have that as like my center of gravity where I was storing assets, that was the first experience. And then it just sort of clicked from there that like, okay, no, stablecoins are actually like, that is the payment rail. And so if like everything financially gets built on top of this, you solve like the digitizing the money movement rail problem, and then you solve like the asset volatility problem. And so, started paying really close attention to everything going on there.
I have
Yeah,
a
go for
sorry.
it.
I will take the midwit to Max's giga brain in this one, which was I was in Singapore recently. I was in a cab. I did not have any cash, or I was in a grab, as it were. I did not have any cash, and the only way for me to pay, I was basically super late to the plane, so I was heading to the airport. No time to stop at an ATM, and the only way I found how to pay was basically by sending a stablecoin balance to my Grab account. And otherwise, all other digital payment methods required me to have a Singaporean ID in order to be able to link up my Singaporean bank account, which I don't have, obviously, to Grab. And so stablecoins saved my hind. And I think one of the things that stands out to me most, really, as we're going through this, is the extent to which people in the US and Europe are actually insulated from the impact that stablecoins are having the world over. So a lot of the folks that we speak with are in Argentina and Mexico and Colombia, in Nigeria, and really all over the world. And it's just such a vibrant ecosystem that I think it's sometimes easy to miss if you're really just focused on Europe and the US.
That makes total sense. It's actually really interesting, the parallel between leveraging a stablecoin in Web 2 to gain access to a goods or a service that you're like unable to access and also what stablecoins are doing in the Web3 space as well, like unifying that experience and making chains or products that might be prohibitively difficult to access through a native token usable through stablecoins, which is, it's just funny that it's happening on both sides of the fence.
For sure.
Awesome. Yeah. And kind of on that note, like in terms of getting stablecoin products to market, increasing adoption, like where we're sitting right now, what would you say, like, where are you seeing the biggest challenges, either in our space or in Web2? Like what really needs to be done or what needs to be changed? Or what are the biggest blockers to really starting to see normal people using stablecoins, stablecoins being a little more ubiquitous across Web3, any or all of those?
Yeah, I could start. So I think like stablecoins as a way to move value from A to B, I think people like quickly wrap their heads around that and get excited about it. Stablecoins as a way to get people globally access to dollar denominated value. Also, that works well and people quickly wrap their heads around it and are excited. The biggest challenge by far is it's not easy yet to spend the stable coins. Like you can't just go to a store in most places and say, I have stable coins, I'm paying you, and have that process be smooth. And so that is the biggest challenge. And I think we're seeing like really, really fast evolution and maturity on, actually using the value you hold with stable coins. The one I'm most excited about in the near term is being able to attach a card to a wallet so that you could just spend down the value anywhere, like a Visa or a MasterCard are accepted. There's some really great companies that are building around that, like Rain or Coolapa and many others. And so that's a part of the stack that I'm really optimistic about right now.
Great. Yeah, actually on that note, I noticed a sort of a difference between specific markets where there's like a very pressing need for stable coins and there's like a really clear problem that is being solved. It seems like those markets, either through traditional regulatory methods or through gray markets, manage to incorporate stablecoin usage fairly rapidly. Whereas in markets where there isn't that need or the currency is sound or maybe the use case is a little more, a little less clear up front, it's much more difficult. So I'm wondering if you think, maybe Henry, you can speak to this, like, do you think it's more a function of regulation or of like product market fit, depending on the market that you're trying to access?
It's a great question. The honest take is, I mean, what we're seeing is real dependency. And let me know if I've understood your question correctly, but what we're seeing is real dependency on the geography, meaning in the US, for example, there's weaker product market fit because everybody's already operating in dollars. Abroad, there's stronger product market fit. You could say, Tether is the first 0-100 hedge fund where they get to keep all the carry from invested dollars because holding the dollars itself is the value. It has perfect product market fit. And so the places where we're seeing lack of adoption, or at least slower adoption, is either clear lack of regulatory clarity and real questions around how do we as a business operate here. And otherwise, it's the PMF question. But I think the exciting thing is, I think stable coins are one of the first instances in crypto where you don't need to think about rebasing your stack as a whole. I think it's basically a part of the stack that is equally exciting, both for very large established businesses that are driving real revenue and that see this as an opportunity to improve both top line and bottom line, meaning get new customers, get more flows going, but also save on margin and get better, cheaper services out to their users. But it also opens up the space for, call it, new neobanks to get started, new payments processors to get started. And that's, I think, the part that really excites me is in the places where it is taking off, it's both a mix of startups and incumbents adopting these rails. Did I answer your question at all, or was I completely off?
Yeah, no, that was exactly it. 100%. What I find, like, I don't know if this will actually come to fruition, but like I find it really interesting that some of these markets that are early to the game with stablecoin adoptions as a function of necessity almost have this, competitive advantage to create these new products around things as regulatory clarity starts to fall into place, because there's already that muscle memory and experience with that. So I think that might be interesting over the next couple of years.
Totally.
Awesome. Thanks, guys, for the stablecoin rapid fire question. Maybe we can spend a couple of minutes talking about Privy and what you're working on over there.
Yeah, for sure.
Great. Do you want to just take a real quick minute and do a better explanation than I did of what Privy exactly is and what you're doing?
Of course. And your explanation was very good. Don't discount it. We power the user onboarding flow and wallet infrastructure for many of the most popular crypto products. So Privy works with a lot of the companies that people will think of when they think of crypto, whether that's the NFT marketplace, OpenSea, or trading platforms like Hyperliquid, DYDX, Pump.Fun, social apps like Zora, Friendtech, Rodeo. For a lot of these companies, we make it really easy for users to onboard. We power the upfront sign-in flow. And then importantly, we provision wallets for users when they sign in so that they could do anything on chain that's needed in the product, but it's fully embedded in the product. So it really just feels, like you're using Instagram or TikTok or Uber. You don't feel like it's a crypto product. It's very under the hood. And increasingly, we've been working with fintechs as they've, over the last year, embraced stablecoins to improve all of their financial infrastructure. You can't really do anything with stablecoins without a wallet. And our wallet infrastructure is, super flexible, easy to embed in products. And so companies like Toku, which is a payroll platform that allows contractors around the world to get paid in stablecoins, use Privy, for example, to provision wallets for recipients so that they could get paid in Argentina in dollar-denominated value.
Amazing. I can also attest to the fact that using Privy is very similar to a Web2 app experience, which is very unique in the space and very much appreciated. It's nice when things just work, which is awesome. Cool. Yeah, that's fantastic. And sort of that brings me to one of the main questions that I wanted to touch on is, Privy infrastructure supports all tokens, not just stable coins, but would maybe Henry double click into some of the major like stablecoin specific use cases that Privy is enabling or products that are leveraging Privy for stablecoin payments?
For sure. So it breaks down in the way that Max was saying earlier. It's basically like send money or hold value. And you can kind of think, at least that's how I think about the world, which is you are using this to get money from A to B very, very quickly, or you are using this to actually hold assets in a digital currency for more extended periods of time. Broadly, the reality is that, shout out to Bridge for completely changing the way people think about these rails. I think their major insight and the way they've executed beautifully is that ultimately these are payments APIs, not crypto APIs for a lot of the purchasers of these flows. And so for moving money, it is about how do you orchestrate basically getting the fiat, there's a whole basically on-ramping part, you get the fiat into a wallet as crypto. And then from there, you can do this. I think the place where Privy plays the most is on holding value. That is to say, for companies, treasury management, I want to set up an account, for example, and we work with a company called Slash. They're doing basically stablecoin banking. I want to set up an account and I want to have all of the security that I get from a bank account managed potentially by companies. That is to say like multi-sigs. I want my account to be, call it a USDC and PyUSD account that can transact up to, call it $1,000 with no added verification. But any transfer above $1,000 requires, 2 of 3 of you, me, and Max to approve it. And every transfer over $1 million requires all 3 of us plus some other cold key to approve the transfer. So it's, the programmability of embedded wallets basically being used to enable account and treasury management in B2B use cases. And then obviously, as Max was giving an example of Toku, it's about giving people who are otherwise not crypto native the ability to receive, hold, and spend stable coins from across the world. So, let's assume you're a Nigerian contractor working for Privy. You are getting paid for the first time now. You have an option to opt in to receive USDC as your payment rather than a transition to Naira. So obviously there's the fees in moving the USD that we are paying out into Naira through multiple banking partners in the traditional financial rails. But beyond that, there's the fact that you just got paid in Naira. Naira has devalued, call it, 3 to 5x against a dollar over the past few years. And now you actually get to hold your USDC and spend it down when you need to on the ground in Lagos. And this is where we think a lot about, why is it important to hold and control the wallet system as a builder working on stablecoin infrastructure? And I think the reason is really twofold. First, it is the sort of crux of your relationship to the user. And you'll need to have the flexibility to plug in multiple rails to it. If you're a global company, you're not going to work with one off-ramp, you're going to work with multiple off-ramps. And to that end, in fact, you're probably going to work with a card issuer platform like Coolipa or like Rain. And you're going to want to give basically multimodal access to the assets that you hold to your end user. And controlling the wallet is really the point at which you can make these connections in a super flexible way. So that was a very long-winded answer, but these are the sorts of things that we're seeing on the ground as we serve customers in basically, remittances, payments, treasury management, et cetera, et cetera.
No, that was great. It sounds like some very scalable infrastructure, both like from the user all the way up to institutional level, which is really interesting. Kind of on that note, Max, you mentioned earlier there's a game that you guys really excited about. You wanted to meet with. You talk about B2B financial institutions. Like, what are the major market segments that you're really seeing adopt Privy? What are you sort of excited about in that space? Like,
Yeah. So spending a ton of time with fintech, payments companies, businesses that otherwise would not be doing anything in crypto, but move money internationally and benefit from the things Henry was just talking about that stablecoins unlock. Spending a ton of time there. And then on the crypto, the more, built day one on crypto rail side, there are a couple of pockets of the market we're seeing a ton of activity. There's a lot happening in the space of what happens if you take a wallet and let an AI agent manage it. This is like just a massive new design space that's opening up. We have a customer banker that you can tag in the Twitter feed, and it can like manage a wallet on your behalf. And they've inspired like a ton of cool new experimentation with wallets. So lots of cool stuff happening there. Lots of cool versions of like what happens if you build a Web2 app on crypto rails, a Web2 social app. So Zora and Rodeo are doing some really cool experimentation of, if you post good content and people engage with it, do you as the creator get rewarded? I think we're like a few knob turns away from that becoming like a strictly better experience for users and creators than the off-chain alternative. So very excited about that. Seeing a lot of stuff in gaming, as we were talking about earlier. The team at Pirate Nation is the former founding team of Zynga, building Farmville, introducing a lot of like crypto mechanics, largely for payment use cases, is really cool to see. And then the last thing, we've talked about this a bit in person, that I'm really excited about and I think is going to take off a ton this year, is consumer apps that use stablecoins as like the in-app payment layer. I think far and away the best example of this is Blackbird. And so Blackbird is a restaurant loyalty program. If you're in New York, you've probably been to a Blackbird restaurant. It's founded by the founder of Resi. And so they've managed to get like basically every hot restaurant in New York City on Blackbird. And when you go to a Blackbird restaurant, you tap your phone and you earn points that you can use to pay your bill at any other restaurant in the network. And those points are on chain, stable value, and it's completely under the hood. And I think a lot of consumer apps are seeing how Blackbird is building like a more flexible, more efficient, more direct payment system in what otherwise would just be a great consumer app on crypto rails, and inspiring a lot of other consumer founders to think about crypto similarly. So in-app payments for like just great consumer app experiences is something I'm super excited about.
Amazing. A lot of great examples. Love Blackbird. Love Banker as well. And correct me if I'm wrong, but doesn't Grok's wallet run on Privy as well?
So via Banker, Twitter's AI Grok has a wallet that they are using to raise funds for debt relief. Very unclear exactly how that ends up playing out, but I think the coolest thing that we're getting out of this is it's just really captivating the market's imagination of what's possible.
Super interesting. This is not financial. I forgot to qualify. This is not financial advice. I love Banker as an idea, as a project, but yeah, it definitely was a really interesting period of time last week when that got spun up.
Yep. And then
Cool.
Need to mention it. There's like a ton of cool stuff happening on the trading front as well. So whether it's, Hyperliquid, which just recently passed $1 trillion of trading volume built on Privy wallet infrastructure, or Pump.Fun or Vector, which is doing a cool job adding like a social component to trading. A lot of innovation happening there too.
Incredible. Huge numbers. Amazing. Thank you for that. So we've got a couple minutes left. I wanted to save the best for last, and just bring up what has been all over my timeline the last day and a half. You guys recently did another raise. Huge congratulations. That's awesome. Was wondering if maybe you wanted to speak to that a little bit about, like a little bit, maybe discuss what that's going to open up for you guys, what your plans are going forward, because that's some big news.
Yeah.
Go for it, Henry.
Yeah, I'll jump into here. I mean, I think, the honest take is we're basically starting to move into, we've always had the philosophy as a team that focus is the greatest thing that a startup has going for it. And doing fewer things, doing them exceedingly well is how we get to build really good products. And so we've kept the team very, very small. And I think for a very long time, that was a huge service that we did to ourselves and to the product quality that we were able to put out. I think as the space has grown, as the opportunity set has grown, as the scale of customers generally is exploding, and through everything that we're seeing out there, there was a sense of the fact that even though we're, kind of early into our Series A funding sort of consumption, which is to say we've only started eating into our Series A funds, there was a real opportunity for us, and it requires us to grow. So a lot of the funding was about, one, getting a really fantastic partner on board, and the folks at Ribbit Capital are really second to none when it comes to understanding a lot of the payments world, neobanking world, fintech world, and they're also very crypto native, and so they're a rare breed, and I think a really, really good addition to the set of folks that we work with today, folks at Sequoia, folks at Blue Yard, folks at Paradigm, and it's been really, really great to get to work with them. So that was the first goal, was really getting them to become a partner, since we've been admirers of their work for a long time. And then obviously the second is we're going to be doing a lot of hiring as we continue to grow, and funding is helpful for that. So very, very excited about what comes next. For us, this was a bit of a pit stop basically as we continue, and it allows us to sort of double down and focus on our customers.
Amazing. Great to hear good projects winning. Cool. Well, we're just about the end. Maybe time for one more quick one. I'm going to throw it out there, completely open-ended. What do we in the space need to be doing better to drive adoption forward at this point, from where your perspective is? I'll open up to either of you if you have a hot take on that, and then we can close her down.
Great question.
Go ahead, Max.
Recording from.
Like the tribalism is like frustrating me a lot. I think we're like way too focused on like, why is this implementation of crypto better than that implementation of crypto? And I think focusing our attention on like the big non-crypto opportunity, and how we tackle that versus like, how we differentiate on the margin versus a bunch of people who are all kind of trying to do the same thing is the healthiest thing we could do to move in the right direction.
I think that is a great answer. And I will add another, which is I think a real focus on jobs to be done. I think the infrastructure is obviously very exciting. And if we go too far and basically move crypto to a place where it is no longer crypto, where interoperability, where self-custody are no longer core sort of tenets and features that we can give users, then we've gone too far. But I think at times we're overly focused on infra at the cost of understanding what that unlocks for builders and their users. And so I had for me at least, a really important conversation early in Privy's life with one of our teammates, Ankush. And we were talking about, what is our account extraction strategy? Specifically, what should we do with 4337? And he, I think, had a reply, which was, it's the wrong question. We should be talking about what should we do with 4337. We should be asking about what are the capabilities that 4337 unlocks. Are we most interested in gas sponsorship? Are we most interested in social recovery with different signers in a given wallet? Are we most interested in transaction batching? And then let's figure out how we walk backwards to get the infrastructure that gets us to best fulfill that job to be done. And so I think if crypto can really focus, and specifically infra builders can really focus on what is the job to be done that they're helping achieve for their customer, their user, I think that'll really change the way people perceive crypto as being a much more sort of unlock technology rather than insular technology.
I think that makes a ton of sense. I think it's a really fine line to walk between adhering to the core tenets of, I think, what brought most people to the space in the first place, and wanting to move fast and develop, and striking that balance has taken a long time, but it's more a feature than a bug than anything else. But love it.
And I think the take is we're going to mess it up. Like, no question, it's such a fine line that there's no way that we don't get it wrong in places. But as long as we're, clear-eyed, transparent, and we iterate when we do fuck it up, then I think we building a perfect system no one uses is obviously an anti-goal. Building the same system that already exists is the other one. And I think walking the space in between means being willing to make mistakes, but hopefully owning up to them and iterating.
100% agreed. Amazing. Thank you guys so much for joining. This has been awesome. Max, was there anything else you wanted to throw in before we jump?
No. Time you too is time well spent. Thank you so much.
Appreciate it. Feel the same way. Thank you very much, both Henry and Max from Privy. Thanks to everyone for joining. Call it here. Have a great Wednesday, and we'll see you soon. Cheers.
Thank you.